The EU faces a tariff dilemma. Take President Trump's deal or leave it. A US trade proposal could land in the EU's inbox this week. The bloc faces a big decision: accept a far from perfect offer now or gamble to secure last-minute exemptions. President Trump's administration is claiming that a deal is imminent. And with the ECB's next meeting 2 weeks away, it's far from a summer break for Europe. Tim Graf is head of macro strategy for EMEA at State Street Global. So Tim, what's the best outcome for the European economy? Take the 10% baseline tariff?
I think if they are offered only the 10% baseline tariff, they should probably grab that with both hands. That is definitely the best case outcome they could hope for. I suspect it won't be that generous because the US is putting higher tariffs on what it considers to be critical goods like autos in particular, which will be relevant for Europe. So yes, if there is just 10% across the board, that represents, I think, for Europe, a massive outcome, given that's probably about as good an outcome as any country will get from the US.
So if the EU were to take a tougher tone in negotiations, what countermeasures could be in place?
They can always counter tariff. That seems to be one strategy that they've talked about potentially using. But as we've seen in the back and forth with China after Liberation Day, that usually just escalates things to the point where the US will counter their counter tariffs. They can also think about competitive measures, particularly aimed at the US tech sector. That seems to be one vulnerability. But there again, I don't think that really happens without the US retaliating in kind to that.
So the euro has been one of the biggest winners from Trump's trade plans. How much higher can it go?
Yeah, I think it's one because of the weakness in the dollar more generally, but also because Europe is spending more fiscally or is planning to do so. And so I think that's a theme that's not going to go away. Neither of these themes on fiscal spending or on trade are going to go away anytime soon. I would actually think 125 on euro dollar is certainly a feasible level at some point later this year, maybe in the next 3 months or so even.
Tim, let's turn to the ECB now. And Villeroy said this week the central bank will clarify whether it's deploying unconventional tools. So what should we be on the watch for?
Well, I mean, they've been deploying unconventional tools for, of course, many years now. And I think the message is really providing greater clarity on why they're employing unconventional tools. It's that greater clarity, the more educational aspects, I guess, that the ECB will probably focus a little bit more on should they need to deploy them again, because of course they're currently reining back things like previous asset purchases. They're letting the balance sheet shrink. Previous efforts such as the TLTROs have completely rolled off the balance sheet. It's more about when new measures need to be deployed, just providing that greater clarity, the greater information and education for the market. That's what to look for.
Clear divides between hawks and doves have emerged from the ECB. How fierce will the fighting be when they meet this month?
I mean, the ECB is a consensus building institution, so probably not that fierce at the end of the day. But I think there is a vigorous debate to be had now on inflation. It does look as though, from some of our measures, that it's starting to bottom out, particularly when you look at goods inflation. That has been a big drag in past quarters and past months. It actually now looks, especially when you're in the midst of a trade war, to be potentially a boost to inflation. And so I think that really is the debate: is have we bottomed? And I think the answer is one that the hawks will find a lot of a lot of support from, in that we do see inflation having bottomed.
That was Tim Graf of State Street Global. Don't forget, you can watch more videos on Reuters.com.